Let's talk about the loan to value ratio, the numbers on your pre-qualification letter, or even in general speaking, what is LTV? How much interest you are paying? Let's get started. When you receive a pre-qualification letter from your lender or even pre-approval letter, it will tell you the dollar amount you qualify for. I'm going to use $300,000 as a reference. You are qualifying. Congratulations, you are qualified. $300,000 and loan to LTV is 97%. So what does that mean? That tells you that the loan amount is 97% of the value $300,000. So when you purchase a home, the home asks $300,000 or can be lower. If it is 290, then just 290. They just say maximum you qualify for at this moment is $300,000. Then you borrow the amount, the loan amount is not 300, is 100% minus 97%. 97% is your maximum borrower ability. Then $300,000 times 97% is 291,000. I didn't do the math right now. I did it before I did the video. So $291,000 is your loan amount. So that's what LTV means. Could it be you qualify for $300,000 and then your LTV is 95%, 96.5%? That is FHA because the minimum requirement for FHA is 3.5% down. So we automatically know your LTV is 96.5%. So you can just use that number times the price, whatever the asking price is, or agreed price. Let's move on to the interest. Let's say your rate is 6.5%. Then how much that you are paying? You only be charged on the interest that you are borrowing. So you are only borrowing 291,000. Then your yearly interest rate will be the 291, the loan amount times the rate. So that gives you yearly interest rate. You divide it by 12, that gives you a whole month. Usually the mortgage payment due in full, like you are closing August 20, let's just say not August, now it's almost the end of August. Let's just say you are scheduled to close on September 15th, and then your mortgage payment will not due until November 1st, because the mortgage payment always due for the full month. So due arrear means you used it already, but you're paying later, arrear. So November 1st payment is for the whole month of October 2024. What about the month you moved in, half month is from September 15th to September 30th. So that is on your CD or LE, you will say the section called prepaids. Prepaids is the prepaid interest. That is that. So you from September 15th, the date you closing, you are responsible for that day up, and then until September 30th. So you at your closing, you will need to pay from the interest amount from September 15th to September 30th, because you're responsible for that 15 days. Then you can just use whatever, how much per year interest is divided by 12. Then you can divide it by usually you don't have to calculate yourself. They will do it, but you just need to know the method, the behind the scene why. Then that's why they collect prepaid interest at closing. Your payment for October 1st to October 31st will not due until November 1st. So at closing, you will receive a whole bunch of paperwork. Everything you sign the date, you should be able to receive a copy of that. It includes a amortization table. Remember, you want that because just that's all yours. You need to learn that amortization. That breaks down from day one, from month one to month, if you have a 30 years to month 360. So it tells you that each month how much the money you paid, your mortgage payment you made, how much it went towards to principal, how much it went towards the interest, how much towards to escrow. Escrow is property tax and insurance. And you could have mortgage insurance too. Then you should be able to say when time goes, the money dollar amount applied towards your interest going to smaller, then the money paid towards your principal is getting larger. That means it's good as long as you're paying on time. Okay. And then that is the amortization table that tells you towards almost towards your the end of your long term, you will see majority of the money you paid is out towards to the principal. Why? Because interest is charged, dollar amount is based on the loan or balance you owed. So you owe this, so that makes huge difference. If you want to pay more if you want to pay more towards your principal, you can call or talk to the customer care before you make payment, or even after you're saying, hey, I want to invest, I want to pay more, this much money, $200, I want to pay towards to the principal, so they can do that for you. Even you don't do it, as long as you're paying on time, then you will see the change. Even you're paying late, I don't suggest you any late payment. I can tell you why. One thing is, if you're late, interest, you will pay more interest, of course. You have late fee. Then let me tell you what else could happen. When you need a refinance, those late payments is roadblocker. Could be roadblocker. I'm not saying guarantee, but it is. It's kind of like you gotta have reliable payment. What I mean late is you don't want to go over 30 days, because that will report it on your credit report. If you late a couple of days, there is a grace period too. If you late for if you made a payment after the grace period, then you're gonna have problem. No late payment. I don't want to see 30 days past due. Make sure that you always call loan servicing company, call the customer care. Hey, there's something going on. Tell them the story, tell them what's going on. You'll be amazed at what they can do for you. And there's nothing guaranteed, of course, but communication is the key. Okay? Let me know in a comment that do you have any questions regard the things I talked about today and what I went over in this short video, and anything else that you want to learn about mortgage and the real estate. Other than that, thank you for watching, and please understand, support me, follow me on TikTok and YouTube, subscribe to my channel. YouTube is Real Talk with Lynn. Then TikTok is Home Loans with Lynn. But I know you're here. Please support me and share my video to your friends, to your followers, and can help me reach my goal. Hopefully, I can go live one day soon. Thank you so much. Have a wonderful evening.